Hey everyone, welcome back to the channel. Today, we're diving deep into a game-changing financial concept. Why building assets is far more powerful than just piling up savings. Now, saving money is great. It's the foundation of any sound financial plan. But if you're truly serious about building wealth, financial independence, and securing a prosperous future, assets are where the magic happens. Let's break down exactly what we mean by savings versus assets, why building assets can transform your finances, and specific steps to get started on this journey. Stick with me, because this is the kind of information that can put you on the path to long-term wealth and freedom. What are savings and why do we rely on them? Let's start with the basics. Savings typically sit in a bank account, perhaps a high-yield savings account or a money market account. They're safe, liquid, and readily accessible. For most people, savings are the go-to for financial security because they feel stable. But the downside is they don't grow much over time. Even high-yield savings accounts barely keep up with inflation. We're often told to save for a rainy day, and this is great advice. But if all we're doing is saving, we're essentially treading water financially. Our money sits there, accumulating tiny amounts of interest, but it doesn't really grow. What are assets, and why are they different? Now let's talk assets. Assets are anything you own that has value, and more importantly, the potential to grow in value or generate income. This could be stocks, bonds, real estate, a business, or intellectual property. The main difference is that assets actively work to grow your wealth, either by appreciating over time or by creating cash flow. When we say build assets, we're talking about building streams of wealth. While savings protect your wealth, assets grow it. They make your money work for you, creating income and building value, and they can fundamentally change your financial situation over time. Why inflation eats away at savings? One major factor that highlights the difference between assets and savings is inflation. Inflation is the gradual increase in prices over time, and it directly affects the value of money. With rising inflation, every dollar you save is slowly losing purchasing power. So, while it's essential to have a savings buffer for emergencies, having too much in savings can actually cause you to lose wealth over time. For example, let's say you have $10,000 sitting in a savings account with a 1% interest rate. If inflation is 3%, the purchasing power of that $10,000 is actually shrinking each year. On the other hand, assets, such as stocks, real estate, or even well-selected businesses, typically increase in value over time, often at a rate that outpaces inflation. So while inflation is eating away at savings, it's often fueling the growth of assets. 4. The power of compounding through assets. One of the most compelling reasons to build assets is the power of compounding. Compounding allows your money to grow exponentially. When you invest in assets that appreciate, like stocks or real estate, the returns you earn start to generate their own returns. For example, if you have $10,000 invested with an annual return of 8%, it grows to $10,800 in the first year. But in the second year, you're earning on $10,800, not just $10,000, and that effect snowballs over time. This compounding effect can lead to substantial growth, and the earlier you start, the more time you give your assets to compound. It's why people who invest in assets early in life often have significantly more wealth down the road than those who simply saved cash in a bank. Assets create passive income streams. Now let's talk about passive income. Unlike savings, which you have to dip into when you need money, assets can generate income on their own. This is called passive income, money earned with minimal effort from your part. And it's a true game changer for building wealth. For example, owning dividend-paying stocks gives you a regular income stream as companies pay you a portion of their profits. Real estate can provide rental income, and even owning a small business or intellectual property, like a book or an online course, can bring in income consistently. The beauty of passive income is that it allows you to cover expenses, reinvest, or save without needing to work for every dollar. This is one of the most powerful aspects of asset building. Passive income gives you financial freedom and security beyond what savings alone can offer. The wealth-building potential of assets versus savings. Assets have a unique ability to create long-term wealth. When you own appreciating assets, you're benefiting from their growth over time, especially during periods of economic expansion. For instance, the real estate market and stock market have both historically grown significantly over decades, despite short-term dips. Owning a home or investing in stocks allows you to capture that growth. Meanwhile, savings sitting in a bank don't offer that kind of potential. When you prioritize building assets, you're setting yourself up for a more financially secure future. You're not just preparing for next year. You're building wealth for the next decade, retirement, or even future generations. Why savings are important, but just the start. Savings are still crucial, especially for emergency funds and short-term goals. It's essential to have some savings set aside to handle unexpected expenses. Financial experts usually recommend having at least 6 months of living expenses in a savings account for emergencies. But once you have that safety net, putting excess money into savings is like letting potential wealth sit idle. A balanced approach is to use savings for security and liquidity while directing additional funds into assets that will grow and work for you. Once you've built an emergency fund, it's time to focus on building assets that will grow and support you in the future. Different types of assets to consider. Now, let's break down some of the main types of assets to consider when building wealth. Stocks and bonds. Stocks offer potential for high returns and dividends, while bonds provide lower but more stable returns. Both can be good options depending on your risk tolerance and time horizon. Real estate. Real estate can be a powerful wealth-building tool offering rental income and appreciation. Plus, there are various ways to invest in real estate, from direct ownership to REITs, real estate investment trusts, that allow you to invest without managing properties. Businesses. Owning a business or investing in one can provide substantial income and wealth-building opportunities. Starting or investing in a business is higher risk, but offers high reward potential. Intellectual property. Creative assets like books, music, patents, or online courses can bring in royalties and passive income, giving you value for years after the initial work is done. Precious metals and commodities. Gold, silver, and other commodities can act as a hedge against inflation and offer long-term value. Each of these assets has its own risk and reward profile, but they all have the potential to grow wealth far beyond what a standard savings account can achieve. How to start building assets. Today, building assets might sound intimidating, but it doesn't have to be. You can start small and scale over time. For example, invest in an index fund or ETF. If you're new to investing, index funds or ETFs, exchange-traded funds, are a great entry point. They offer diversified exposure to the stock market with relatively low risk. Consider real estate crowdfunding. If direct real estate ownership feels too big a leap, consider platforms that allow you to invest in real estate projects with smaller amounts. Build a small side business. Starting a side business, whether it's freelance work, consulting, or selling a product, can be an easy way to generate additional income that you can invest. Invest consistently. Make it a habit to regularly invest a portion of your income in assets rather than letting it sit in a savings account. Small, consistent contributions can lead to big results over time. 10. Shifting your mindset from saver to investor. Building assets often requires a mindset shift, from being a saver to becoming an investor. It's about learning to take calculated risks and trust in the growth of your assets over time. Remember, building wealth isn't about quick wins. It's about steady, long-term growth. The sooner you shift to focusing on assets, the more time your wealth has to grow and the more financial security you can create for yourself. So there you have it. The reasons why building assets is the key to true wealth and financial freedom. While savings give you safety, assets give you growth, income, and compounding power that can completely transform your financial future. The best part is that anyone can start building assets no matter where you are financially. If you want to secure your future, don't just save, build assets. Thanks for watching. And if you found this video helpful, don't forget to like, subscribe, and share. Let's keep moving forward, one smart financial decision at a time. See you in the next video!